Thank you very much, Nash, and IIBI for inviting me here, Ernst & Young for providing the venue. This presentation is actually building upon one I did last year, which was on Islamic finance in Africa. And those, of course, that was particular to Africa. This has also got some inputs from Africa and other places. But this is looking at a more wider subject. And there are three questions which we would like to see if we can answer. The first one is, what is the status of Islamic finance today? What are we doing? The second one is that, what are the new areas in which Islamic finance can expand? And clearly the third one, as Nash said, is that, are we equipped to take on that challenge, or are we not able to take on that challenge? And I want to look at that through the lens of what we call financial inclusion. In the last 10 years, really more, the last 10 years only, I think, institutions like the World Bank have started to do a lot of work on financial inclusion, because we found, as development economists in that sense, that if somebody is not in the financial economy, then you are really not dealing with that person at all. And there are lots of things which you cannot do. In fact, best estimates are suggesting that financial inclusion itself can deliver between 1 and 2% per year of GDP growth to an economy. So if you're growing at 4-5%, you increase your inclusion, then you might be able to up that by 1 or 2%, which is a significant amount of growth just from that input, value add. And there are so many misconceptions about financial inclusion, possibility of servicing this market, whether banks are suited to service it or not, and the interface between banks and then microfinance institutions and so on, whether that works or not, the costs of delivery of services and so on. So let's begin this by looking at some of these questions. So first of all, to take you a snapshot of Islamic finance, we see that presently the buzz on Islamic finance really is between Malaysia and GCC countries. That's where you would see the bulk of Islamic finance products being marketed, sold. You have, of course, additionally, countries like Sudan, Pakistan, and Iran, which have at various stages said that their whole economy is governed by Islamic finance. But leave those three countries aside, because each one has its own history and its own characteristics. But these two places have genuinely got some momentum, probably getting something between 10 and 20% of their banking systems are working on Islamic finance. So even there, where you have all the goodwill, in Malaysia, for example, of the central bank and so on, we are reaching about 20%. In terms of products, because of the challenge from established banks, conventional financial institutions, and conventional products, a lot of the products you will see are effectively reverse engineered to comply with the Sharia. So if you want to have, for example, a bond, you engineer your sukuk to mimic a bond. If you want to have a deposit account, you create a profit equalization reserve and so on to create an account, and so on and so forth, right? If you want home finance, you create a rental contract. So that has been a significant driver and limitation of the products we can offer. And also, it is only products which are offered by conventional banks which are offered effectively in another form. Sharia compliant, we don't have a discussion on whether they are Sharia compliant or not. Let's take it that they are Sharia compliant. But This has meant that two particular modalities, both controversial in Islamic commercial law, tawarruk and murabaha, dominate about 80% of the Islamic banking market. We may talk about risk-sharing products, but these are the two which dominate, and they are then translated into sukuk structures and others. So if you really focus on these two products, the key feature of these two products are that they are the nearest to conventional banking products. They will fit into conventional banking regulatory structures, frameworks, accounting frameworks, whatever. And so it's a question of minor financial engineering to get them going. Okay? And then from there, you move on to provide products like credit cards, consumption loans, and so on, all Islamic. However, as you can see, this is addressing a very reasonably affluent urban market. There's no product here which services any of the needs of a non-urban market, right? This is also addressing an affluent market. If you look at outside these two regions and think of where the growth is going to come from, and you see people talking about Africa, the Maghreb countries, Indonesia, Pakistan, Bangladesh, and so on. These are not countries with largely urban populations. These are countries with largely rural populations, countries where the bulk of the occupation of people is agriculture-based. Okay? And so you have a challenge here, you have a disconnect. If these institutions want to go and do that work there, existing Islamic banks, they will not be able to deliver anything. And we are seeing, for example, the first half Islamic bank in Nigeria, right? I'm using half advisedly because only in Kano at the moment. And some of the directors come to me and say, what can we do? I said, what are you offering? These people of Kano are sophisticated traders since the day Islam came to them and even before. You can't tell them that take this and this. They will look at what is their advantage. Unless you find a way to appeal to them with a product which they think they need. So you need to think again. And this challenge will be faced wherever you go, right? So, let us look at some of the target countries, right? Clearly, those countries where you have large number of Muslims. So, India, about 200 million. Pakistan, 160, 170 million. Bangladesh, same. Indonesia, 200 million. Nigeria, 90 million. Egypt, 74 million. Ethiopia, 53 million. Sudan, 22 million. Tanzania, 22 million, and so on, down. So, really, if you want to spread this, you want to tackle these countries. Turkey, Iran, and Egypt, for example, each one is between 70 to 80 million. And you want to go there. But relatively more sophisticated than India, Pakistan, Bangladesh. So you need to be careful how. Now let us look at some of the characteristics of these countries. First of all, let us look at the global population. The global adult population, not the total population, is roughly 4.7 billion. By adult we mean over 16 years of age. Yeah? So the balance of the global population is younger. Out of that, the best estimates are globally that the unbanked population is 2.5 billion, or more than half. So more than half have no access to banking or financial services. Now, since this is global figure, if you narrow it down to outside OECD and so on, you are looking at global unbanked figure of roughly 80%, which means only 20% on average are banked. And we will see some of the figures there. Now, you might think that the people who are unbanked are not worthy of being banked because they are too poor and banks are not interested. So if you take a cutoff point of, say, less than $5 a day, right? Would any banker here want to talk to anybody who has income of less than $5 a day? All right? But let's look at this. So India, for example, has got an adult population of 760 million. And the figures show that the banked population of India is around 48%. 365 million, right? But the GDP figures for India show that only 20 million of these would be earning more than $5 a day. Which means that 345 million banked people in India are on less than $5 a day. The Indian banking system is servicing a large amount of people whom you would intuitively think are not bankable. The other thing you might see, or you might think, is that since the bulk of this population is rural, they cannot be banked. Again, you find places like India and more recently Bangladesh defying this. In fact, Bangladesh is quite an interesting exception. And you know, Bangladesh has been the sort of home for the rise of well-known microfinance institutions, Islamic and non-Islamic, right? So Grameen, BRAC, Islamic Bank of Bangladesh, and so on. And it is estimated that these microfinance institutions have increased the growth rate of Bangladesh by 2% by GDP, 2% a year. And the banked population of Bangladesh is 31%. The urban population is only 25%. If you say 30% or 25% is banked in urban areas, then you can see that the bulk of the people are in rural areas on less than $5 a day. So we have to figure out, Islamic banks, especially Islamic financial institutions, how to talk to people on less than $5 a day if you want to go to these markets. Otherwise, you are not in business. Okay. In terms of financial inclusion, let's look at the challenges. If you look at global figures, Arab states as a whole have a banked population of 33%. But clearly, these are skewed in terms of places like Saudi Arabia, Kuwait, Dubai, and so on, where it is a largely urban population, banked, relatively affluent. So if you are looking at a country like Oman, which is now the flavor of the month for Islamic finance, 33% only is banked, while 71% is urban. So that tells you something about that economy. But if you go somewhere like Yemen, you have only 14% banked, 27% urban population. South Asia is generally 42%, but that's been brought up by India and Bangladesh. Pakistan, which is another big hopeful front for Islamic finance, 12% only is banked. If you get 20% share of 12%, that's only 2% share of the market, because you can't reach 90% of the people with the kind of facilities you have. And 35% of Pakistan's population is urban. Sub-Saharan Africa, overall banked rates are 20%. Two examples here. Kenya, it's only 10% banked, whereas 21% is urban. Nigeria, overall is only 15% banked, whereas 50% of Nigerian population is urban, skewed towards the south. So if you then do a further analysis of north-south Nigeria, you might come to 7-8% banked population in the north, and 30%, 20% urban. So you have a serious challenge to address those big 200 million numbers which you saw. And you say, okay, I have 1 billion people here, I can sell Islamic finance to them. It doesn't work like that. You have to look at quite detail. In comparison, if you look at high income OECD countries, 92% of the population is banked or has access to financial services. So you see the contrast here, yeah? Okay, we go to some other states. Saudi Arabia, 62% is banked, 81% urban. This makes sense. Egypt, about 41% banked, 43% urban. Iraq, 17% only banked, 67% urban. Now, these are World Bank figures, not mine, so I have no bias against any particular country or place. South Asia, 42% banked as we saw. Malaysia, 60%. 67% urban. Indonesia, 40%. 48% urban. India is 48%, 29% urban. So India is an exception to the rule that despite being largely rural, it has banking facilities. And this was because of the extension of regional banks, rural banks, all kinds of things, and then microfinance across India in a large number of ways. If you, however, extract the Muslim population of India out and you look at something like the Sachar report, you will see that Muslims have half that rate of banking in India. Now, one of the reasons advanced is that Muslims don't like to interact with the conventional banking system, therefore they are not banking. I don't think that is true, but it has to be proved this way or that way, right? You go to a place like, anybody from India? Okay, that's better. You go to a place like Zakir Nagar in Delhi, right, which is a Muslim area. And you say, I want to buy this house. So they say that, okay, it is worth, say, 5 million rupees. We will pay 1 million on the books and you will pay 4 million on top, out of books. So the title deed entry is made for 1 million rupees, right? If I go to my bank and say I want to borrow on this property, Masood will say, I'll give you maximum 60% loan to value, right? That's not going to take me anywhere for a 5 million property. But he cannot collateralize for his banking regulations, reporting, everything else, anything other than that. So you can see that a normal banking system cannot work there until that economic structure changes towards reporting the actual numbers, right? And it's worse in Muslim areas than other areas, Zakir Nagar and things which are very highly priced areas, but lowly reported. So you have problems which you need to analyze there before we jump into retail banking, Islamic banking in India. It's not going to be that easy. Okay, we talked a little bit about the importance of financial inclusion and the kind of growth it can deliver. There are a number of things which are happening which will increase. The figures I've given you are from the World Bank for 2005. So they are a little bit old, but these figures are very difficult to compile. So we will get the next set by 2015. Countries like Iran, India, Egypt are looking at this issue of financial inclusion and come up with some very interesting ways to create that. For example, and you don't have to agree with these measures or otherwise, Iran set the scene. The IMF has been talking to Iran and saying that you have to reduce subsidies on fuel and food and whatever because the subsidies bill is just ballooning. Now clearly, in every country like Egypt, India, this is a political issue. If you reduce subsidies, you will have riots. So what Iran did 3 years ago, it said that we will give each person equivalent of the subsidies per person. So I think it's $40 a year now at the moment, yes, if I'm not wrong. So we give you $40 cash. We will increase the price, we remove the subsidies, but you have the money to pay for it. And then gradually over a number of years, we will slowly bring that down. But that's the theory, right? But the condition for getting that $40 is that you need to have a bank account. You will not be able to get cash in your hands. All right? So that creates financial inclusion. We suggested this model to Nigeria, to Malam Sanusi, central bank governor. I said, Malam, this is a good model. He said, it's very good, but we cannot do it in Nigeria. I said, why? He said, you see, a lot of subsidized petrol, fertilizer, and so on is smuggled across borders, and it fills the pockets of politicians. If you give to everybody, this smuggling trade is gone. So, so we cannot find political will to do that at the moment. India is trying, and it has done in a number of states with number of things, and that's why you see the Indian backed figures going up. Egypt is looking at those options. I think that's one of the only ways really we can get out of the treadmill of subsidies. Otherwise, Egypt, for example, is now paying 70% of its budget into subsidies. And it's just not sustainable. So is Nigeria, paying colossal amounts into subsidies. So I think that in the next 5-10 years, financial inclusion itself will increase, and therefore the opportunities for banks to operate in these areas will also increase. Now, what are the challenges in these new target markets? One is that they have very large infrastructure needs, which have immediate investment requirements, long paybacks, mostly paybacks from government revenue and so on, so quite tricky. Some of those can be handled by international institutions like the World Bank, IMF, but then there is also room for private banks. They have large unbanked populations, so to bring them into the whole structure is not that easy. Or to create payment systems which are efficient and cost effective. See, one of the banking challenges is the cost of delivery of your service. I remember that people were telling me that, look, this Grameen Bank is charging 25%, 30% rates. I said, fine. If you do a murabaha, what will you charge for the same service? If you're going to charge 25, 30%, then don't complain about that. Complain about other things. Why would you charge the same? Because the cost of delivery to that service, to that village, absorbs 20% of its return. So he's only making 3, 4, 5%, which is a normal turnaround for banks to operate, right? So there's no point in going that way. You go to some other things. Okay, then what are the dominant financing requirements of this population? Agricultural finance? And do we have a tailor-made product for that in Islamic finance? We have. We are not using it for that. We are using it for other things. Think about the salam product, right? Which was exactly meant for paying the farmer the value of the crop upfront and getting delivery of the crop on harvest. Taking the risk of that, and the farmer removes the risk from it. There's a product already. That is what it was used for. Now we are using for stock trading and all kinds of other things, but that's not the original intention of this product there. Commodity finance, same kind of thing. Export finance. And of course, microfinance, which means those who fall below certain banking norms, then you need to get hold of them. So these are the challenges we have. Now, what innovations are needed to address those challenges? One is delivery methods. As I said, if the delivery channels are going to be too expensive, the cost of providing that is going to be expensive, if it is a commercial operation, right? Overcoming these handicaps. Now, one of the innovative things which has happened, and this is very interesting. This I also showed in, let me just show you. This is the internet connectivity in Africa. 1995 and 2001. Most of Africa is now connected, right? Some very efficiently, some not. But if you look at this, you will see that Africa will be connected very, very efficiently soon. There is undersea cables going across the continent now, and then just being put into different countries. So you will have equivalent of broadband connections at decent costs across Africa. So what is the unbanked population of Africa? 80%. So, and what do you think is the proportion of people in Africa who have access to mobile phones? Huh?
80%.
80%, right? So the argument that these people are not able to read and write, cannot use technology, is not correct, right? So the best platform for this, you can see the example is in Kenya. And it's called M-Pesa, mobile pesa. Pesa in Swahili means money, mobile money, right? Through a mobile technology platform called Safaricom. Safaricom is the ex-Vodafone in Kenya. Provides this. 80% of people can use it to transfer money, to bank money, to pay for goods, to do whatever. And they pay a small transaction fee every time they do it. So there is a way of reaching this unbanked population in a cost-effective manner, if you like, in most of these countries. In places like Iran, Iraq also, mobile usage is more or less 80% plus, right? So it's not a limitation, and it reduces the delivery costs. You don't need bricks and mortar now. You can do lots of things on that. All right. Let's go back. So these are the challenges, okay? Now, what are the innovations we need? We need to go back to the original contracts, which were meant for this kind of circumstances, and see how we can do it, how we can actually provide finance for these people. Even if they are less than $5 a day, as we saw, they are bankable. There is no problem. And we do those. And there is one more addition we want to do on top, and that is provision of what we call, microfinance, yes, everybody knows now, but micro-takaful. The greatest risk for a borrower on microfinance, or for a lender to a microfinance borrower, is what? Incapacity of the borrower. There's no performance risk, is no greater than otherwise. It's the incapacity of the borrower. For example, in a village, if I have borrowed, and if my young child falls sick, I have to take them to the nearest town. It could be 2 weeks of a whole journey, and by that time my borrowing is default. If you can find a micro-takaful solution to cover that eventuality, the credit risk taken by the microfinance lender becomes much more manageable, and much more willingness is there to lend. Yeah, and this is beginning to happen in some places. Microfinance and microinsurance, so Islamic microfinance and micro-takaful, they need to go together to make sure that we can push that envelope further. Okay. Let's look at Africa as a quick example. The rural-urban split is 60-40. Key occupations, agriculture, animal husbandry. Key exports, commodities, oils, and minerals. Average GDP per capita less than $1,000 per year. PPP, or purchasing power parity. Bank population 20%, 30% max. Urban banked 40%, rural banked 10%. banking facilities, bricks and mortar, if you like, one bank per 100,000 people, and mostly city-based. Capital markets, very few and rudimentary. I mean, if whole of Africa, you have Johannesburg, Nairobi, Lagos, and Cairo, more or less. That's it. And all those are also very, if you like, thin markets. Yeah, you can't. Johannesburg probably slightly better than others, right? So raising capital and all these things, this is out on the capital markets. And these are the potential countries which have indicated and are beginning to look at Islamic finance. They are changing laws, doing regulatory studies, trying to issue sukuks and so on, right? And we saw this internet connectivity, mobile phone. So the opportunities are there. Can we take those? Let us see. Who are the other players in these places? The first big player, in infrastructure especially, is the World Bank Group. So you have here 2 or 3 parts of the World Bank. One is the IDA, International Development Association. This is for low-income countries. I think it's sub $500 per head GDP, right? This you cannot compete with. It's a 50-year loan, 10 years grace, no interest. Okay? No Islamic bank will come, or no bank will come near that. But it's only meant for certain things, which is human capacity building, like schools and hospitals and basic infrastructure and so on, which is fine. Then you have the World Bank Group itself, the International Bank for Reconstruction and Development, which gives long-term loans on infrastructure projects, development projects. Again, they won't come into private sector. So you don't have competition, and they are enabling. So they could create a lot of things which will make your projects bankable, right? This is the idea, to make things bankable, and then so we take it from there. And then the International Finance Corporation, which will compete in some cases. This is a private sector arm of the World Bank, so it will be lending on commercial terms. But also IFC doesn't like to lend fully, so it will syndicate with banks and so on. Okay? Multilateral development banks, which are offshoots of this, the African Development Bank, Asian Development Bank, Islamic Development Bank, they might also come into these projects. Bilateral development aid, like our DFID and so on, which is fine. But also a lot of resource seekers now, people who want access to food, mineral resources, land banks, and so on, they are beginning to come in. And of course, predatory agricultural land seekers. You have seen in Somalia, Sudan, and so on, some of these activities going on. So you have to figure those out and steer clear of those. Okay? Now, can Islamic finance deliver this agenda? Present Islamic finance, mostly delivering to urban middle classes, mostly for urban needs, little agricultural lending, little microfinance, negligible micro-takaful, negligible use of innovative technology. So unless we change our focus, we cannot expand from where we are. We are looking at 20% share of 20% banked, which is 4%. It's not a big enough market, and even there, the main competition point will be price rather than service or product differentiation. This cannot work. I rest my case.